to the rationalinvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Rational Investors Daily Brief. What's Chris got here for a headline? GDP growth rises. All right, party on. I see it says live, but it's actually maybe interesting. There's like a play button I have to hit on this thing. Actually, see. All right, there we go. Oh, isn't that interesting? What are we screen sharing? I think we're screen sharing the itinerary. Do we have that right? Or am I guess I'm screen sharing. Isn't that weird? Is that all right, let's refresh that. Anyway, butcher job as usual. Brian, way to go. Chris is total boss. Thank you for no, I'm still showing that. So I'm not quite sure what I've done here. But hope I didn't screw this up. What do you guys over on YouTube see? Do you see? Oh, is this like maybe yesterday's? Is that what I don't know what's going on here. Looks fine. I see both. Okay. It's weird. Like I'll just show you on the screen. Like when I look at this, it shows there's our agenda for today's meeting. I'm not quite sure what the heck we're doing. Oh, I see. And scroll it right to now, and there's Brian being a doofus. All right, well, that makes sense. Par for the course, right? Okay, so anyway, oh no, now it kicked. Wow, isn't this YouTube thing's acting really weird here for me? Okay, gone. All right, I don't know what's going on here, folks, but I don't know whether I've messed things up here or not, but I'll try my best. Okay, it looks like let's see. I am not a crook. I'm not a crook. Let's see if that shows up on YouTube. And I've got the grease back hair today, so my apologies. Of course, we had lots of econs come out this morning. I was up first thing, of course, 5 o'clock in the morning, my time, watching the markets. Everything's up and down like a you know what. So anyway, here I am. You get Brian and all of his beautifulness. We should do a poll. Should I shave the goatee? Does it look kind of stupid? Actually, I think they call this a Van Dyke, if I'm not mistaken, which actually is pretty typical of Dutch. And actually, I got that really cool message yesterday. And actually, and I'm kind of wasting time here. So maybe we'll talk about it another day. But check out the comments from yesterday. Somebody actually said, one person said like, well, you're not using the, so look at that. Did you just put that poll up, Chris? That's hilarious. So let's see. Oh, look at that. 100% says yes. Oh, I'm dead. Well, Connor, you better put in there. No, there you go. So I balance that out. That's cool. Anyway, we're having fun here. Okay, let's get back to business. This is serious. Okay, interesting to see the breadth indicator actually turned up smartly there the other day. And we did have the stock market rally appreciably. Isn't that weird? So that goddamn YouTube page just kicked back to the intro pick. I don't know whether you guys see that or not, but on my end, it's just showing the intro pick, and it's like it's stalled again. Isn't that bizarre? I don't know what the hell's going on here. No, anyway, Cotter's our keep us honest indicator over on the YouTube, and he says it's fine. So quit complaining. All right. So, trying to be the best practice demonstrator of best practices, blah, blah, blah. You know how it goes. Wednesday, today is EIA day. Missed a killer trade in crude oil this morning. Got to say, Adam C. In our day trader room, he caught the top, and I think he made some good money on crude. So way to go, Adam. But checking in, computer okay, diet and exercise, it's there. Shoulder's actually slowly getting better over time, and they said that it would just heal naturally. So I suppose that's okay. Still got the COVID toes. Thank you very much, Mr. Fauci, and all your conspiracy crap. And of course, sleep. Did get a better sleep, so that's encouraging. I had a couple of people actually comment in the videos, and I like the comments. I love the feedback from you guys. The more feedback that we get, the better. Some people were like, "Brian, I wish you go to bed early." Anyway, headlines first thing this morning, being Wednesday, middle of the week. Of course, we got EIA that does dominate quite a bit. But also, too, we were wondering how was this Chinese stimmy kind of attempt that they've been doing here recently going to play out? They lowered sort of a trading tax that they had, and I mean that probably helps the brokers a bit. But also, too, I think that there was another big measure that they brought in. They're actually going to mandate the lowering of mortgage rates for all these suckers who've bought these unfinished homes in China. And there's no way in hell the homes are ever going to get finished. But oh, isn't CCP Mafia wonderful? They've lowered your mortgage rate on those houses you'll never see. What a fucking joke. Anyway, the scuttlebutt I'm hearing in the market kind of is like, this is so typical mafioso CCP, but it's not really going to fix the underlying problem. And that is that, this is kind of like, you remember in Goodfellas, where they have a restaurant and that guy basically brings the mob in as protection. And they just keep running the credit up against the restaurant, keep running it up, keep running it up. And, they say finally the only thing left to do is burn it down and collect the insurance policy. And that's kind of the where China is right now. And I've conjectured all along here, do we have one of these Lehman moments where the whole damn house of cards starts collapsing in on itself? So anyway, we'll see how that goes. We have been sort of watching, and as you can see, the Chinese markets were kind of muted today. The rally didn't have a hell of a lot of legs. And of course, I like to follow Japan, and it was up 1/3% on the day. So I wouldn't be surprised if everything's relatively equal, that the Americans actually finish up maybe about 1/3% on the day. We'll see how that goes. We did have a bunch of econs come out in the US market today. So, we have the headline here: US private job growth slows to 5-month low. Of course, remember yesterday we had the JOLTS report, which of course a lot of people in the market follow pretty closely, and the quits and all that kind of stuff. And it's showing that indeed the labor market is sort of calming down, and that relentless inflationary push that often happens when the workers are getting completely screwed by higher prices across the board. Usually the inflation story goes cost push. So that's going to be like your energy and your food and your rent and your utilities and clothing and all that kind of crap. And then the workers go, hey, you're screwing us over, man. We need higher wages. We need a raise. And then, of course, through the post-COVID nonsense, Biden pushed through just absolutely ridiculous government spending programs that really nobody can afford. I'm not quite sure how the socialists can justify this. And what a big surprise. The economy can't afford this kind of government spending. So instantly inflation took off like a rocket. And now we've been trying to deal with this inflationary problem since. I get the impression that the market kind of was almost pricing in, based on yesterday's sort of econs with regard to the jobs markets and stuff, that the Fed was done raising interest rates. I did hear someone yesterday talk a little bit about how there was about a 40-50% chance for another rate hike in the November meeting. And now that's gone to almost like zero now. So we'll see how that goes. And I think, I had mentioned, I don't know whether it was yesterday that I mentioned it or the day before. And actually, you don't even see it on the screen now because we've gone beyond it. But yesterday's screen. In fact, I think I even posted it in our SOF club meeting last night. It was quite remarkable. It was almost like just a massive, right across the board program trade that kicked in. I wouldn't mind showing it to you guys just so you guys can see what it looked like. Let's see, do we have that? Oh my goodness, this is super slow. All right, where was that? Up here somewhere. And actually, we had a really fun meeting. And ironically enough, the one message that came out of last night's meeting for our stock pickers club was we actually are pretty bullish of gold here. So, which is interesting. But here is that this was sort of the market matrix of yesterday. So you can see just, and it, Bitcoin caught quite a bit. And we were kind of talking about how the Bitcoin and crypto community all sort of, like what's the reason why this launched? And everybody blamed this grayscale SEC sort of thing that's going on there as the reason. But frankly speaking, I don't think that that was the reason for this rally. You can see it was right across the board. The US dollar index started to come off in earnest. Euro, yen, commodity currencies, gold, even oil, of course, the cryptocurrencies, the stock market took off like a rocket. And why? Everybody was blaming it on this rally in the bond market, right? And the anticipation that jobs market is calming down, the inflationary pressure that everybody's worried about, and the Fed having to continue to raise interest rates, that's abating. So the problem with that, though, is that actually we have the Fed's most preferred inflation gauge that they really like to work off of coming out tomorrow. So I don't know whether you can actually read too much into this, other than this was, what probably a lot of people would just simply call a dead cat bounce. So anyway, that was the move yesterday, and it was big. Trust me, it was a huge, huge move. Sort of watching all of these tech stocks because they were the ones that sort of were in trouble here recently. And things like the Tesla key reversal, weekly key reversal, it's now back to its entry level. I'd be really curious to see whether Tesla can move higher, but you can see S&P 500 is pressing higher. Nvidia is leading the charge over there. Apple is very strong here today, heading into the gap now. So I wouldn't be surprised if Apple moves up a bit more. So, things like Microsoft were threatening to put in these reversal bars, but basically reversing that action. You can see how the QQQs had a big reversal bar that was smashed. That's actually extremely bullish. And I was even mentioning that in the club meeting last night, that if you have a chart pattern and, if you want to take something away, write it down for future reference. This NASDAQ's probably a good proxy here. If you have a really bearish sort of short-term pattern that is like instantly broken, that is a very powerful message in the marketplace. You can imagine anybody who did get short, especially with these gaps and that tail right there, there probably was people that saw that reversal bar, went short, and then all of a sudden the market just started to lift away from there. So you can imagine any kind of pullbacks down into this area. There's going to be a whole bunch of trap bears that would like to get out of that trade. I don't know whether we're ready to break out per se, but I will say that that was a pretty strong reversal there coming off of that bearish key reversal. And then what I find fascinating about all this is that, of course, this is in the face of this very powerful breadth signal. Probably a really cool way for you to see this in a little bit better detail is if we look at something like the tech sector. So just to give you an idea of how you can use this dashboard to really fine tune your signals. If we come down to, we've got a whole universe here. Here's our market universe. And as I said, the S&P 500 super bullish, but we also follow the tech stocks through the big tech index. I mean, it's almost a replication of the QQQs, the NASDAQ 100, but we follow this technology index. And if we take a look at what this looks like, you can see the breadth indicator again. Very, very bullish turn there. Very powerful. So there was the, as we had sort of said there a moment ago, we had the bearish break with all those bearish key reversals, and then the market quickly took that back and now has actually put in a bottom, an actual W here. So I got to say, that's a pretty darn bullish read there. So that's sort of the backdrop. And I think, like I said there a moment ago, I think a lot of this was just simply predicated on the idea that it looks like the US sort of inflationary problem with regard to the employment situation, the continual rise of short-term interest rates is finally addressing that. And actually, we had today data coming out that's showing, let's see, where can I show you? Okay, this is real time right here. So we had data coming out today, and it was a pretty busy econ day, no doubt about it, lots of econs. Just scrolling down to the US, some of these data prints came out, and actually, is this the right, am I on the right day? August 30th, yep. So here, why don't we put this to like 2 stars, try and reduce the size of this a bit. Here we go. So what are some of the data points that we can chew on here today? ADP employment growth, and I think if I'm not mistaken, we have jobs numbers. I don't know whether we have jobs numbers at the end of the week here, but I do know those jobs numbers are coming down the pike. Yeah, so on Friday, we have non-farm payrolls. That's going to be a pretty big market moving event. So as sort of a heads up to that event, we had the ADP employment change come out. This is a private survey. And as you can see, it came in quite a bit weaker than what's expected. And I think a lot of people were again, like I said, this is the focus of the Fed. They really need to have this jobs market calm down. So this sort of ties in with the JOLTS report that we saw yesterday and the quits and all that the employment sector is calming down. And this is probably a really good example of, what's good for Main Street is usually bad for Wall Street. And what's bad for Main Street, and that's what this would be, is usually good for Wall Street. As well, GDP growth rates came in. The market was looking for about 2.4%, and it actually came in at 2.1%. So there's another reason that the Fed can kind of go, well, growth isn't nearly as robust and as strong as we thought it was. So maybe we ought to cool our jets on raising interest rates more. Trade balance actually came in a little bit better than expected. That's another sign that American consumers aren't spending ridiculous amounts of money that they don't have, but a hot economy kind of idea that actually maybe consumers are pulling in spending a bit. Wholesale inventories, I'm not going to really read too much into that. Usually when inventories go up, that's actually a sign that the economy itself is doing badly. So actually inventory is being drawn down a little bit, but almost a non-event number. GDP, this was a big one, I think, where again, sort of this idea of we're worried about price inflation, coming in pretty good. This is GDP price index coming in a little bit better than expected. The one thing that actually jumped out at me today, which probably is going to help the stock market quite a bit, is you can see corporate profits came in substantially higher than expectations. Market was actually looking for another sort of minus 5% and actually came in at plus 1.6%. So that's another sort of good thing for Wall Street, not really relevant to Main Street, but if I was a stock investor, seeing this is actually very bullish of stocks. Then you have to ask yourself, well, who's driving the bus? And then remember, we have NVIDIA is making more money than stink. And that's basically what this is that, some of these parts of the economy are actually doing much better than expected. Another inventories number. This is X autos, slight uptick there. If anything, maybe this makes sense that the consumer part of the economy, it's kind of wishy-washy. Pending home sales raw number, and then of course the year over year numbers, pretty big drop. And actually it was interesting, I just had on my screen And actually, a lot of places are talking about how you're going to take advantage of the coming fall in the real estate market. And of course, my country, I think that this local market is due for a major crash. But that's Canada. Frankly speaking, not really too much of our audience is really following Canada. Interesting, the final sort of econ that hit this morning, there was a lot of them, but the final one that hit, crude oil inventories, huge drawdown, massive drawdown in crude inventories. You can see the market was looking for a drawdown of 3 million, actually came in drawdown of 10 million. Interestingly enough, this is such a great example. I had said earlier that, you know, Adam actually nailed that top, but we had the most pretty top there, right on the EIA event, right on this. So, what happened here, I think, was it was a buy the rumor. And then as soon as the news hit, the market topped out and absolutely puked out. And what a beautiful analogy of our 2.618 chaos theory objective. And quite literally, the market tagged this and then just totally reversed. I mean, geez, it's incredible to see this stuff in action. So let's see where that is. Over here somewhere. How am I doing? Oh, now I'm down $10. Oh no. Anyway, let's see what we got here. Well, there's the crude. It's actually now up 2 ticks. But look at this. Isn't this incredible? What a great analogy of Foggenbaum and chaos. So quite literally, that should have been your profit objective window, and then basically the price just stopped. Ugh, crazy market. Anyway, so is it just interesting how the news was actually a massive drawdown, which should have been hugely bullish. But the problem is that the market, I guess, had seen this coming, and it had built that bullish news into price. And then once that actually comes out, the only direction price can actually go is down. So how ironic. But anyway, hats off to Adam. He was able to catch that trade this morning. Way to go. Let's see. Anything else really to talk about? I suppose, what time is it? Yeah, we got about 5 minutes left here. So why don't we pop? Yeah, I think you have a pretty good idea what the econs were. The stock market, late summer, very, very jittery, up and down and up and down. So I don't really think that there's a discernible trend here per se, other than the market's catching a bit of a bid. But look at the Bitcoin futures. I usually like to use the Bitcoin futures as a leading indicator. They're not happy at all. So I'm skeptical about whether this rally is really for real. And you saw just a second ago, I had a little short working against the top of the range here on the stock market. I might get blown out, lose $30. I'm okay with that. But really, this is just simply my bread and butter. We had a failure, precipitous drop, a reload zone test, good old Brian's favorite fib, 78.6. And you can see I actually fat fingered the trade. I put on 2 contracts, then I just took one off. So it's, if this does go against me, I'm not going to get my head handed to me. So interesting late summer trades. As I had said there a moment ago, believe it or not, actually heading out of the sort of Labor Day weekend, I actually think that there's a good chance into early September we actually could have a precipitous rally in the stock market. Notice that this low did not take out this low. So that means we can actually start drawing things like Foggenbaums. And look at where 2.618 is. You might find that this thing actually ratchets all the way up into here, basically takes out the old highs, and we put in a new top there into early September. And actually, it was interesting. One gentleman on the day trader room this morning, he likes to follow his 20-year cycles, and he was even saying that he's expecting into, I think, the second week of September, and September is going to be a weird month too. So just keep in mind, September options expiry for the big monthly contract comes pretty early in the month. And then we have the Fed over here. And if he understood correctly, that the 20-year cycle is looking for some sort of pivot basically in about 2 weeks. So, we might just go up, bust out my cute little short attempt against these highs. I'm having $30 risk. That's not the end of the world either way. But I could see, especially I noticed that things like, uh, as we said, Tesla is trying to take back its weekly key reversal level. It's got a big gap up top, so you might find that guy bumps up quite a bit here. And then also, too, probably the big one is Apple here is back into its price gap. So this is all open air. You might find that Apple just ratchets right back up into this gap here, fills that in, and that's your rally over the next week or two, as Apple does nothing more than just rally back to trendline resistance. So I could very easily see that. Also, too, what I would say, being the very end of the summer, seeing these kind of price charts and stuff just jumping all over the place here, really, this is the hallmark of a very illiquid market. So I was willing to take a shot if we were going to rally back up against the top end of the range. I don't know what's going to happen here. I'll live with the results. It's not that big of a deal. But just understand, like, this is actually very typical of illiquid, thin markets where they can just absolutely destroy people. So if you are going to take a risk, you better have very clear risk windows. Don't try and like fudge things, because you might get caught in one of these whirlwinds and it just completely destroy your account. It's not worth the risk. So if you're going to place a trade, pick your levels. I don't really mind this as a trade, but if I get stopped out on a bust to new highs, I'm going to lose $30 on the trade. Big fucking deal. So anyway, there's your report for the day. As we said, NASDAQ tech looking pretty strong. Whoop, they just went and took out those old highs. Be interesting to see whether this has any legs further or whether we need to pull back here. And also, too, this is a pretty good commentary on old economy versus new economy. So new economy, right, booming to new highs, but this is the Dow. It's not doing anything here, is it? And actually, as you can see, I was hunting potential bearish bot setups to try and play a continuation trade to the downside there. So I don't know who's going to win. If the old economy, and these are things like bank stocks, if they flounder here, then I think ES rolls back over and back down we go. If new economy, tech stocks, Apple, Tesla's rallying back up to fill in gaps, if they carry the day, then I think they're going to push the market back up to new highs. So there you go. Interesting how Bitcoin, the futures here, just not catching a bid. So I suppose one area of the market that you'd like to see hold on, Bitcoin did have what I think was probably a pretty cliche sort of pivot off of this neckline level here on the Bitcoin. This is the spot market. And you've heard me talk at length in recent videos, candle body, those for trade location. This was basically a reload zone down in here of this particular range. This is 38.2 off of the entire range. There is that 38.2 reference. And then the rally yesterday, like I said, it felt like it was just a program trade. Everything lifted across the board when those bonds started to firm up. You can see yesterday's rally, all we did was we just punched right into a whole bunch of moving average resistance. We have backed away from there. And actually in our day, not our pro trader room, where, people who subscribe to these, advanced signals, they were all happier than stink, of course, because we had a big algo buy signal there. And, seeing the rally pop up here nicely was a big treat for them. But actually, I'm starting to hear some of them start to go, now would actually be a nice time for this algo to roll back over. We have relieved a lot of the oversold condition. We did things like 38.2 bounces, rallied into moving average resistance. Me personally, I think I would like to actually see this make a new high. But and then if we look at our momentum indicators, we see that they make no new highs and create that divergence. And then I could actually start thinking about shorting. I don't really have a short here. This is straight up, straight down, back into moving average support, probably like Wyckoff check kind of conversations. So let's see how this develops over the next little bit. There is no real signal here. There was a beautiful little W breakout that actually came in on this bar over here. So, and like I said, algos, they went bullish a while ago. You know, those people that had balls of steel, reload zones were beautiful trade location. So I hope you made some money on that move. It was a pretty nice looking move. Okay, I think that's probably it for our summary video today. 9:32, that's about a half an hour, including all the funny little confusion at the beginning from Brian. But I hope you got some good value out of all that. And keep your eyes peeled. There's still a lot of econs coming out tomorrow. It's also month end tomorrow, so we're probably going to have a bunch of window dressing around that. We've got the personal consumption expenditure number that's coming out from the Fed tomorrow, if I'm not mistaken, as well. So that should definitely get our attention. Yeah, personal income, core PCE. This is going to be a huge driver tomorrow. And if these numbers come out ugly, you might find that the whole damn rally that you just saw all of a sudden starts to melt down. If, however, these numbers come in positive, we probably launched to new highs. And then finally on Friday, we've got the big non-farm payrolls, employment numbers. And of course, we've talked lots about trading around these things. Things can get absolutely crazy through those non-farm payroll reports. So it should be a wild couple days ahead of us, folks. And then, of course, we have the Labor Day weekend. Then following that, we actually have the pros come back and we can sort of get back to sort of normal business. So anyway, okay, hope you enjoyed that report, got some value out of it. Hit the like button, subscribe, tell a friend or two. Also, if you want to post a comment, I'd love to hear what's on your guys' minds. And thank you very much for that technical comment there yesterday about picture-in-picture stuff. I'm going to show that to Chris and see whether we can use that information to make the videos any better. All right, have yourselves a great day. PMA for the win. All the best, and bye for now.